or the new kid on the block, will list in about 9 minutes from now, listing at a significant premium to its IPO price. No surprise out there. But the point being, is the Indian consumer seeing some of this optimism in the markets? And is it translating into sales in a very busy wedding season as well as an upcoming holiday season? Akash Agarwal, whole-time director at V2 Retail, with us on the show. Akash, good having you. Thanks so much for taking the time out and joining us. How do you characterize sales, not just for the festive month of October, but even post that? Has the traction stayed on, or has it been, is it difficult to call that?
Yeah, hi, thanks for having me. So in Q2, we grew by almost 64%, and we were expecting a very strong festival quarter because of festive and winter demand. And October, in fact, was the best quarter in the history of the company for us, both in terms of sales and in terms of per square feet sales. So we have seen very good demand, and it was actually better than expected. We saw a high double-digit SSSG. And it has been continuing into November because of, now winter is here and the temperatures are dropping. So, and because of weddings. So we've seen a lot of uptake in the occasion wear sales as well. So yes, I would say the festive demand overall has been very, very positive.
Just to lay it out, you mentioned that there was a strong number in the month of October, and that is continued in the month of November. So October festive demand was very strong. That's continued thus far. And therefore places you almost a high probability of having a very strong Q3 as well.
Yes. So we expect to grow by at least 40 to 50% in revenues, and also establish a double-digit SSSG in Q3 as well as in the coming quarters.
So consumer sentiment is strong. It's not taking a dip. Or Akash, would you attribute this to the pockets that you are present in and the goods that you are selling? I'm trying to see if this extrapolates into other categories and other formats as well, or is this specific to a North India retailer wherein, because the weather is also now turning cold, then apparel sales of that kind also sells? How would you characterize it?
So we have seen growth across all regions and across all categories. But I would say this is more pertinent to value fashion because, customers are getting more value conscious. And when they see more value being given by, other fashion retailers, maybe there's a movement happening from an upper tier to a lower tier. That is why we are seeing this kind of demand. But when you see the reports of different FMCG companies and car companies, yes, they show a certain, rural and urban slowdown. But, gladly, we haven't seen any of that sort in our business. But I think it's also because of the value proposition that we offer to them. And, being a fashion retailer with only a 55% markup, that plays into our strengths.
Akash, hi, it's also Samina joining in. I want to talk to you about your current store network and what you're building out as well on the e-commerce space. With the upcoming e-commerce launch, what revenue contribution are you anticipating from this vertical? What we want to gauge is, given the nature or the type of customers that you attract, would e-commerce be a good play, and how would the cost-benefit analysis work there, and where do you see that sort of contributing in the next couple of years?
So we have changed our e-commerce approach. Instead of having a centrally distributed e-commerce, what we are focusing on is omni-channel, where we will leverage the existing inventory at our stores so that significantly reduces the logistics and return costs. So we are just providing e-commerce as an additional channel to our existing customer base. So we have an existing customer base of more than 2 crore customers. So we don't expect e-commerce to be a very significant part contribution to revenue. It should be around to start with 1 or 2%, and moving ahead in couple of years, it should move up to 3 to 5%.
Akash, I just want to talk about inventories and the full price sales. Full price sales have accounted for 91% of your total sales in the first half of FY25. How are you managing inventory to maintain this sort of a number that you're pulling out? Any challenges that you're foreseeing, or your costs have gone up as we go into the second half, taking a cue from what you saw in the first half?
So the 91% full price sales is a testament to the efficiency of the merchandising department. So the kind of forecast that we do, the kind of data analytics that we do, and we leverage that data in, planning our next assortment season. So in terms of colors, in terms of fits, in terms of fabrics, so that has really helped us increase the full price sale from almost 80% to 91, 92%. And going forward, our target is to have it more than 90. So that gives us an edge in terms of we are passing on maximum benefit to the consumer, and we believe in true pricing instead of hiking the price up first and then putting on discount.
Your prices have been gradually moving up, right, from what I understand?
So we have changed the product mix. We have reduced the space allocation that we give to general merchandise, and we have increased the space of apparel, which is our strength. That is why there has been an ASP increase. We also removed a lot of entry price points where we couldn't give a certain standard of quality. So we have removed all the substandard quality products in terms of fabric from our stores. So that has slightly also increased the ASPs.
Just one quick last question from my end. Revenue per square foot has increased, and I believe you put out a target of 1,200 rupees per square foot going ahead. When can we expect you to achieve that? And also on operating margins, slight dip is what we saw. You want to give me a sense of what the outlook on margins is going ahead? Because I'm guessing this is more of a revenue business as opposed to focusing on profitability or bottom line.
Yes. So about 2 years back, the revenue per store per month was about 68 lakhs. In 2 years, this year we'll achieve more than 1 crore per store per month. And we plan to reach 1.2 crores. That is about 1,200 rupees per square feet per month in 18 to 24 months. So even if we grow at a 9 to 10% SSSG for the next 2 years, we will reach that number. And in terms of operating margins, so we always talk about pre-Ind AS EBITDA margins. So in pre-Ind AS EBITDA margins, last year it was around 6%. This year, again, we are targeting 6 to 7%. But as we move towards that 1,200 number, the EBITDA margin pre-Ind AS should move to 9 to 10%.
Okay. Well, Akash, congrats for the stupendous growth. Just 10 seconds. What is the year-end, what is the FY25 growth number? Sorry, very quickly, 20 seconds. Akash?
So we closed last year at 1,150 crores, and this year the target is 1,800 crores.
Wow. Okay. Well, wish you all the best for that and wish for that growth to continue, Akash. Keep up the good work. Thanks so much for talking to us today.
Thank you.
That's a very confident V2 Retail of nearly a 50% growth target. And they've done that. They walked the talk thus far. Let's see if that continues. By the way, Samina, new listing and